Okay. Good day to one and all. This is Dr. Sivaram of iknowindices.com. I gave the spike trade call by 11 GMT before that of the data release non-farm payroll. Now by 14:30 GMT, I'm going to review the call, what I had given it, and also the results, and review the market and find out what is expected to happen. Now this is based on the forecast, market reading, and also the trading strategy. As I explained, all put together, we'll be able to trade in the market so that we should be able to consistently earn money for the market, whether the market is going up or coming down. Now, let me review the forecast, what I have given it. The forecast was telling that the swing and rise is expected to happen after that of the non-farm payroll. But what has happened, because the non-farm payroll was more than expected, there was a big drop in the case of Euro and GBP against that of the market reading. And they're expected to make a swing and firm up during that of the US session. So if you see that, they formed the new low after that of the non-farm payroll in the case of Euro and GBP, and then subsequently they stopped cutting the new low and started gaining the levels nominally. So this is what will come across here. Now, in our trading strategy, what you are supposed to do in such a scenario, when the market has gone against our expectations, the trading strategy has to help us to earn money from the other market. Now, I kept the buy limit order at 1.1126 in the case of Euro and a hedge order at 1.1070. Now, market came down to 1.1046 and holding closer to that of 1.1070 now, and it has not gone above. So in the event, once we have taken the buy and the position is hedged, when the market continue to drop, which is against our expectations, then immediately our risk is limited with the help of the hedging order. Then we can keep stop at entry. Wait for the market to go down anywhere it wants, and then afterwards the market has to reverse, because market means swings and it has to make up and down moves, and continuously they cannot drop or continuously rise the market, because invariably the players make the up and down move in order to earn from that other market. So for that they have to make surprise moves. So when the non-farm payroll was more than expected, they made the drop in the case of Euro and GBP and made overall the USD gaining move in all currencies. Then what happens afterwards? They formed the new low and stopped cutting the low and gained about 20-25 pips from that of the low. And now in the case of GBP, our position is hedged at 1.3080 and market is lower than that. We can still keep stop at entry, or we can wait for the late session. As I explained, that the early and the late sessions, they handle the majors. During the mid session, they will handle the crosses. We can simply keep stop at entry in these two positions. And also in the case of GBP, in the case of Australian dollar, it has come down, but it is not hedged, and it is just showing a nominal about 25 pips negative net change. We can still keep the hedge order in the case of Australian dollar. Once it starts gaining the level, we can keep stop at entry. And in the case of yen, they just nominally gained the level to that of 102 and started hovering around these level. We can just use the trailing stop to protect the profit in the case of USD yen. Now, with regard to the rest of the trades like Euro, GBP and Australian dollar is not hedged. Euro and GBP are hedged. We have to keep stop at entry in the hedge and wait for the market to set the new low during a session, during the early part of the session or during the late part of the session. During those times, they handle the majors. Now, from the 13:30 GMT, the US session has started. After that of 15 GMT is the early session. And in that early session, it has stopped cutting the new low, what it has formed after that of the non-farm payroll release as a knee-jerk reaction. So what you can do is on the dip closer to that of the low, we can close the hedge order with a profit and keep another hedge order below the 30 pips below in order to limit the risk and wait for the market to come up. And in the event, if we keep the hedge at entry, in the hedge order, if the market goes above that, then immediately we have to keep another hedge order 20-25 pips below that market and start trailing it upward as the market continues to go up. And the event, if the hedge is making profit continuously for more than 2 hours, that means they are making an intentional move on the downside, then during that of the late session, we can continue to keep stop at entry and wait for the market to go in for 150 pips negative net change. And that means they are making intentional move. Whenever they make a drop of up to 75 pips in the net change level, they've got a great scope to reverse the market, telling some other story. And if they go beyond 75 pips net change, in the negative net change or positive net change, then it is unlikely to reverse it on the same day. And now people might be thinking, because of the non-farm payroll, the market is going to show continuously US dollar gaining move. But my focus says that they are going to make the US dollar weakening move till the month of October. Till such time, they are expected to just to react for the events and then subsequently start gaining more levels aggressively during the mid-months. So let us watch how exactly it is going to do it. But so we don't blindly follow the forecast, we do the market reading, and in the market reading we find that in the case of Euro and GBP, they are holding below that of the initial low, and so we have to watch for 2 hours. And after 2 hours, if they come above that of the initial low, then it is an extended downward move for the reversal. If it is not coming above that of the initial low, then there is no need to close the hedge with a profit, and we can wait for them to come down. And towards close, when they make 150 pips net change drop, we can book profit and keep hedge order, because during the weekend, normally what they do is they just allow the market to drop and then buy against their sell. Otherwise, they quickly gain the levels like last Friday and book profit with regard to their buy position at the lower level. So they buy low and book profit at a higher level after a quick rise. Similarly, after that of the quick rise, they make a quick drop and buy against sells. This is how they do the trades. So we have to understand we are also traders and nothing to do with the economic conditions of the various countries. So we are mostly interested in finding out whether we have to do a buy and sell trade or a sell and buy trade at a given time. In the event if the market goes against, then we try to use the hedge order to limit the risk. Instead of stop, we use the hedge order and use it for either way trading. And if this equity permits, then what we can do is after the drop of 150 pips, we can buy another euro position and close both the buys above their average. Or we can simply close the hedge with a profit on the downside move, keep another hedge order, and when they continue to gain the raise, when they reverse the market and rise the levels next week, then we can book profit on the buy side also. Market mean swing as far as Euro and GBP are concerned. They will make either way moves in the market. So we can use various type of trading strategies and then try to capture the profit on the upside move or on the downside move. This is how we have to plan our trades. If there are any questions, you can ask me. I am willing to answer to those questions. So they are slowly consolidating here. The net change is less than 75 pips, and there is a great scope for the market to reverse slowly and firm up towards close. And Monday, they are expected to make A week beginning falls more, hold low euro and GBP, and start gaining the levels from that of Tuesday. This is what they are going to do it. And I will come back on Monday and give you during that of the Asian session live market analysis webinar the expected market moves for the next week. And then later on, we'll find out how exactly the players create the market sentiment and act against that of the traders from time to time. So now today the data was positive to that of US dollar because which has created a straight US dollar strengthening move against all currencies. And then they stopped it, but they did not make a massive drop. In the case of Euro and GBP, they had done the drop only for about 75 pips. And normally, this sort of moves is part of the game in the market. So it is not a very significant move for non-farm payroll. Normally, they do about 150 pips drop or the rise during the non-farm payroll, which when they are done only for 75 pips, it indicates that they are only lowering the level cautiously in order to buy against their sells and also induce the traders to become bearish and take sell position, fresh sell position, so that they will be able to track them and earn money on either way moves of the market. So if there are no questions, so I take this opportunity to thank FX Street for the facilities provided to present the webinar. And I'll come back on Monday and give you the forecast for the rest of the next week. And we will come across the trending move on the upside in the month of August. During the second week, it will become visible. Then we will be able to understand that market sentiments are short-lived and they continue to create the market sentiment and act against sort of the traders. So we need to find out how exactly we can follow the forecast and also use the trading strategy to earn during either way moves of the market. So wish you all happy weekend. See you on Monday and we will continue with the same concepts and ideas, how exactly we can earn money from that other market. Let us be focused on that. Thank you one and all. Thank you FX Street. See you on Monday.